Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, August the 8th. The year's 2019. Let's talk trading. EURAUD, day 4. Let's get right to it. Of course, the first thing we have to get to is risk and money management. We know we have to manage our risk each and every trade. So, on the weekly chart, we can see that after hitting that yearly high, the EURAUD pulled back 338 pips. Now, if you remember, you go back, when I was analyzing this pair, I was saying we need to go short. We need to be red rats on this pair for the simple reason holding it overnight is the most costly pair to hold overnight long, but it's also the most profitable pair to hold overnight short in terms of swap. Now, of course, we're just talking a couple of pennies, but if you were managing millions of dollars or billions, you'd want to be on the right side of that. And for those just now tuning in, we have filled all the gaps on the weekly. Okay, pivot point, trigger was long. You see it never hit it. So somewhere in here, right about here, should have been the time where you took profit. Then we had a short trigger, but that should have been ignored the first time. Then the second time here, when we got the short trigger, that too should have been ignored because it hadn't hit the pivot. And then all these shorts would have been ignored too. Unless you were just playing red rat, of course. But from a pure buy zone, there was only a couple valid triggers to go long because we're looking to fill that pivot. Now, on the daily, short trigger was when it exited the previous day's wick, which was huge. That's pretty much a doji. Let's see, open, close, 5 pips. On a candle that huge, I'd call that a doji. And then you just, of course, out of the upper wick zone short, across the daily open short, or across the previous day's low short. All would have paid off. Okay, we have 6 pairs over 100. And once again, EURAUD, the Euro Australian dollar pair, has been profitable short. And I just opened up this trading profile, so no triggers at all so far. Once again, looking at the weekly range, of course, it's all over 100. Let's take a look here at the daily. You can see this pair likes to make at least 60 pips or more, 70 pips or more. It's just, I probably should update and bring in the new frequency distribution indicator, or new. I think I wrote it last year. Also, I should bring up the price analyzer screens too on this pair, just to dig a little bit deeper down in how this pair reacts and travels. And on price action, actually, let me go back one. Let's switch this over to H1. So you can see 30% of the time, actually, on the H1, At the last 100 bars, only one bar was less than 10. And then 30% of the time, the bars were 20 or greater. So when you look at the H1 chart, hourly chart, it's almost guaranteed that wherever it opens, it's going to cross one of those lines. But remember, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And Forex trading, as all trading, is very, very, very risky. You could lose everything. So, if you need advice, seek it from an accredited financial professional. So, okay, disclaimer out of the way. You can see here, open, exited. So this could be a really nice pair to scalp if you're only trading for a couple hours a day and you just want to add, a few pips to your portfolio pocket. You could definitely take advantage of the movement of this pair. The caveat is the spread, and here's 2.2. So subtract, I usually subtract, twice the spread off of that, because you're going to have to make that spread up when you go to exit the trade. And so you can see right here, could have taken a long and maybe already be in profit. Well, let's see. You would at least cover this. Well, you'd be right at the spread if you took that buy signal, or the last time the buying started, and then see right there, it's already starting to sell again. But you can see here, you had 3.9, so that would have given you a pip or two. 5.2 would have given you 3 pips. So, I mean, if you're, not too proud, and you go in and you take a pip here, a couple pips there, and then every now and then you catch a runner, you can see how this pair can be profitable on the scalping for the scalpers. Okay, just looking at a plain chart here, and you can see there's the price. And once again, here we're looking at a weekly, and you can see how that peak there, that was the high for the year. And you see what happened next. Price just came down. Just looking at a blank chart, you don't really need all those fancy indicators, right? And then on the daily, same thing. Just looking at it, you can see how price, got into these wick zones, failed to make a higher high from there, failed to make that, 1, 2, 3 type of setup. Pretty much a doji here. Time for a reversal. But you can see how price has just really been moving on this pair. I guess I forget who suggested it, but I have to say thanks. I don't know if you guys are going to want me to continue the rest of the month with this pair, switch up to a different pair, but I'd kind of like to stay with it. But maybe some people are getting bored with this pair because they don't trade it either. But I just like to stick with a pair to show people that you can really cut down on the variables to improve your trading. I was listening to somebody else's YouTube video last night, and they were talking about, to them, technicals just isn't the way. You have to, the fundamentals. You need to know why price is doing what it's doing. And I couldn't disagree more. You don't need to know why. You don't need to know the why. That's why I'll say, hey, I wonder what's going on. I don't care about the why. All I care about is identifying the direction price is moving and trading accordingly. You know, all I care about is whether or not it fits one of my systems, the buy zone. Is it the wick zone? I mean, that's just how simple it is. Has it, has it run its course on the ATRs? So I can look for a reversal. And the reason why, oh, I might find out a day later or a week later or never find out at all, because I don't care. All I care about is whether or not I'm adding pips to my portfolio. So, but if other people want to trade fundamentals and base their decisions on that, I can understand it. You know, if they're afraid Trump might say something and it's going to, change their portfolio to the negative, I can understand that. But for me, it's just simply sitting here looking at the chart, reading the chart, which it isn't really that hard to do. I mean, once you clear your mind of all that nonsense and you clear your chart of those squigglies, you can see what price is doing. And you don't need some fancy chart. These guys with the Rankos or the 262 tick charts. I mean, if you just understand the nature of charts, you realize there's only one true chart, and that's that tick chart, and everything else is data compression. It's arbitrary that we slice it up as days or weeks or months or minutes or hours. I mean, it's, some people, oh, the 2 hour chart. The 2 hour chart's not going to tell you anything different than the 1 hour chart. It really isn't. If you can read the 1 hour chart, you don't need a 2 hour chart. I mean, either prices, the first hour, once that's put in, the next hour, either price is going to make a higher high, a lower low, or stay within, or both, or it's going to stay within the first hour, meaning either it's going to be, here, let's just make this an hour chart. I mean, here we go. You have this ball. Oh, you start here. Okay, it exited. So if this was the first hour, now you get the second. It exited. So now so there's your 2 hours. Okay, so now here's the first hour. Here's the second hour. But here, that's your 2 hour. What do I need a 2 hour chart for? What's it going to tell me? I mean, this is the way traders get bamboozled, because they don't think things through logically. Okay, they don't look at the data, what the chart is really telling them. So you can see right here, price is now moving up. If we switch back over to price action, you see, so where were we? We were at, we were at 3.5, then price switched. Now we're up another 3.0. So you have about 3 pips or so in your pocket right now, I believe. And actually, let's see. Well, if you waited for the 50 line, that's what would happen. But you see, you could just jump in right at the open. Let's see, the open. So you'd be pretty much at the 50 line anyway. So we did hit a high of 53. So you would have been able to make 3 pips off of that. I know it doesn't sound like much, but it still makes money. And looking at the inside bar on the 4 hour, that was a nice trade there. So, fellow traders, that wraps up today's video. Thanks for watching. And remember, it's not what you trade, It's how you trade it. So drain the banks and hit the subscribe button.